So today I want to share with you an easy strategy that you can implement basically immediately and can position you to potentially see some major gains in your portfolio. What I'm going to share is something that hedge fund managers and seasoned investment bankers use regularly to help their wealthy clients stay wealthy. So if you're a licensed professional, you may already know this, but for the rest of us, I know this will bring you a ton of value. So don't forget to hit that like button and subscribe to the channel. Thank you ahead of time. Now, before I break this down to you, I want to share a quick story with you. Recently, someone asked me what my Bitcoin investing strategy is during this bear market, and my response was quite simple. I mean, I'm basically accumulating. I believe that the next bull run will bring $100,000 Bitcoin. So, I feel like right now there's just a great buying opportunity. So the person I was speaking to responded that he agreed. He said, I'm basically not buying anything right now because I just don't have any of the extra cash lying around. And let me just say, maybe you can relate to this too. I know I can. I wish I can contribute more to my portfolio right now. I wish I could just sell the farm and just go all in, but I don't own a farm. So, I'm basically limited to any leftover money and, the small amount of change I find in my couch. But then I asked him if he owned any Bitcoin, and he said of course he did, but his average buy point was around the $50,000 mark. So I share with him a strategy that I'm going to share with you right now. Now, I'm going to call this strategy the legal wash strategy. And I'm going to do a quick overview just to lay out the strategy, but then I'm going to go just a little bit more into detail so I can show you how to do this the right way and not get in trouble. But first, I'm not a licensed professional and this is not financial advice. And although I will be referencing Bitcoin, this strategy can be applied to basically any crypto in your portfolio. So again, the legal wash strategy works like this. Let's say, like the gentleman I was speaking with, you bought $1,000 worth of Bitcoin at $50,000. So when Bitcoin is at the $50,000 mark, your portfolio is worth $1,000. But then Bitcoin dropped to around $20,000. So at that point, the value of your portfolio is $400, which basically means your portfolio dropped about 60%. So with the legal wash strategy, essentially what you're doing is selling the Bitcoin you bought at $50,000 at a loss, and then you're buying back in at the lower price point, that $20,000 price point, which positions you for a greater gain. Again, if Bitcoin, when Bitcoin hits that $100,000 mark, instead of doubling your money, you just 5 extra money. That's some nice juicy gains. So you may be thinking, hold up, Walter. Wouldn't the outcome be the same in both scenarios? If I had $1,000 at the $50,000 mark and it doubles, I'll have $2,000, right? But if I take the $400 I currently have in my portfolio and buy Bitcoin at the $20,000 mark and it 5x's, then I'll still have $2,000, right? Well, the answer is yes, but I want to explain to you the same thing I explained to the gentleman I was speaking with. So let's say from your job, your income is, $5,000 a month. And like this gentleman, you spend, $2,500 on rent, $500 on your car, and $2,000 on food and bills with just basically nothing left over at the end of the month. Through the legal wash strategy, you can claim a loss from investments of up to $3,000 per year, and anything above that can actually be carried over to future years as well. So again, just keeping with the example, let's say your portfolio went from $1,000 to a current value of $400. You could sell and take that $400 and pay your car note or something, and then the $400 you would have spent on your car note, you take that and buy back into Bitcoin at a lower price point. Trekking? The best part is when you do your taxes, that loss effectively means that you only earned $4,400 that month because you made $5,000 but took a $600 loss, netting you $4,400. Again, you can claim a loss of up to $3,000 per year, and any additional funds can be applied to future years. So again, if your portfolio was $10,000, let's say, you could claim a $3,000 loss this year and then $3,000 next year, and so on and so forth. That tax savings could be big because like in the right scenario, that $3,000 could drop you to a lower tax bracket. But you know what? Even if it doesn't, the true win here is being able to enjoy that lower price point, which gives you so much extra room for even bigger gains. Now, the IRS has defined some pretty clear guidelines on how to legally apply the wash strategy when it comes to securities like stocks and ETFs. And I know Bitcoin and most of the other cryptos out there are not actually securities, and really shouldn't be treated as securities either. So it is totally your call if you choose to follow this next point. But when it comes to securities, again, like stocks and ETFs, there's a 30-day waiting period, meaning after you sell your holdings, you have to wait 30 days before you buy back in if you want to claim the loss. So, for example, if you sold June 19th, you would have to wait until after July 19th to buy back in to claim the loss. Make sense? And this rule really only applies to buying the same security or a like security. So, for example, if you have like Apple stock, you want to sell your Apple stock and then buy back your Apple stock, you will need to wait that 30-day period. However, if you want to sell your Apple stock but then buy something else like Tesla stock, then you don't necessarily have to wait that 30-day period. Great. But how does this apply to Bitcoin? Well, it's hard to say because, Bitcoin is not a security. So it wouldn't fall under the same rules and guidelines as, let's say, your Apple stock, right? But if you want to just play it safe, I would say just wait the 30 days, or with the proceeds, just buy something else like, Ethereum or some Cardano, and you shouldn't run into any issues. Now, as I mentioned in our example, we mainly talked about Bitcoin, but really you can use this strategy with just about any coin or token you hold. The entire crypto market is down, really down, like really down. And you know what? This is probably the best time to take those losses and reposition your holdings. So when we begin to rebound, if done correctly, you can reap those sweet, sweet gains. But let me know your thoughts. What do you think about applying this strategy to your portfolio? Please let me know in the comments. Also, what are your short-term and long-term price predictions for the crypto market? What do you see happening in the future? Please also let me know in the comments. And lastly, I want to thank you for your time. Your time is so valuable to me, so I do hope you found value. And until next time.